Is it? Today is 30th of March 2024. See, as simple as that. The most important thing what we are doing, I can say this is the heart and mind of audit, is we are talking in terms of evidence. Okay, when we are saying evidence, we have covered this subsequently so many times that should be sufficient and it should be appropriate. Okay, it should be sufficient and it should be appropriate. When we say sufficient and appropriate, sufficient means you cannot say that this much information I got it fine. Okay, you have to get multiple sources of information. Understand the point? You have to get multiple sources of evidences. I will not say multiple sources of evidences to cross check. Okay, to make sure that you have to cross check. Then when you say sufficient, it is going to be quantity. Okay, don't say quantity. People say quantity means how much you need, this much you no. The quantity means you should have your own judgment. And appropriate means you should not only have the quantity, you should have the quality. Is it right? You should have quality. When we say it's quality, there are two things. Is it right? It should be reliable. It should be reliable and it should be relevant. Is that now you can say, now we can come to a judgment that quantity is fine. With quantity it has to have a balanced structure with quality also. When we say it's a quality, it is reliable and relevant. This is what we are going to cover, is it right, in detail about this. Now when you do the evidence, you know that we need the evidence for every other thing. For every other concept, we need the evidence. Okay, we need the evidence for financial statements. We need the evidences for balances. Okay, closing balances. We need the evidences for any confirmations. Everything we need evidence. Without evidence, we cannot progress. Now, for the first time, okay, we are covering this, and this is the basics. Okay, this is the basic things which we are going to use very extensively in the subsequent chapters. Examination also, it is a part of very critical assessment area. When we say class of transactions, is that when we say that classes of transactions in terms of assets, is it right, in terms of liabilities, is it in terms of equity, is it right, in terms of equity, in terms of income, in terms of expenses, the same thing. Okay, they're the same thing what we are doing. Now what happens whenever any transaction, take an example, any transaction you wish to know, is it right, that has been recorded and occurred. See, for what happens, the moment we are taking the class of transaction, the first thing is what? The first thing is general entry. This is the basic. This is the basic first thing is you should have a general entry. You should have debits and you should have credit. That is what is. That the event has been recorded. Is that transaction event has been recorded, have been occurred, and it has been occurred with respect to the entity. What we will write, if you see, this is very important. What we will say, we will write general entries. Is it right? We write general entries in the books of. Is it right? In the books of XYZ Limited. In the books of XYZ Limited, we will write. Occurrence is very important. When we are talking about the general entry, we will write the date, we will write what is the debit, what is the credit, what is the amount also. This is the first and foremost evidence which you are going to work it out in terms of occurrence. Okay. Next, in terms completeness. Once you are saying that it has to be at all transactions events should have been recorded, have been recorded. Is it? You should know when we are saying it's a completed. What else? We are taking so many precautions. Is it right? We are taking so many precautions. We say that when we say it's a complete, how we are going to make sure that these transactions are complete? date. One of the controls is that one of the controls is that the sequence number is it right? The sequence number which we auto generated. We have to make sure is it right? That has been recorded means we have to make sure how it will happen. You will have a general entry, is it right? Then you will have the ledger, is it right? Then you will have a general ledger, okay? Then you will have the general ledger. Then you will have the trial balance, is that? Then you have the trial. Then subsequently you will have the financial statements. That is the completeness. Once we are saying it is a completeness, the moment we do any transaction, we swipe a product, is that? We swipe a product, we do any transaction, automatically what will happen? The transactions will be, the entire financial statements will be updated. Okay, the entire financial statements will get updated. It's not one thing, is that? You will take the example, I will write this completeness. You will take the examples of anything, sales, or you take the examples of purchases. Is that once there is a sales, what will happen? The revenue will increase. Is that? You see the thing? The revenue will increase. Once revenue is increasing, definitely you will have cost of sales. Inventory will decrease. Is that? Inventory will decrease. What will happen? The cash will increase. Is that? The cash will increase. Subsequently, all the subsequent transactions will get affected. If there is anything, if it is on a credit sales, your receivables will increase. The moment you are receiving the cash balance will decrease. At one stroke, at one instance, at one transaction, the entire balance sheet will get readjusted. Is that? The entire balance sheet will get readjusted. That is the completeness. Okay, that is the completeness. Next, apart from that, what is the third one? Is that now you make sure that occurrence, we are using this in different cases, but occurrence, the explanation will not change. Understand when the explanation will not change. Accuracy is mathematical accuracy. Maybe now we have almost we have the systems in place. Okay, almost we have systems in place, but every other place will not have systems. Okay, every other place, even you have the systems, you have the software. Make sure that what you have to do on a sample of items, okay, on a sample of items, you have to recalculate. Is it right? Amounts and other data relating to recorded transactions even have been recorded appropriately. Accuracy, we have to see what we have, what are the things we have to see, whether we have to see that all the transactions has been recorded. I'm changing the ink, okay, I'm changing the color of the marker. Okay, all the transactions has to be recorded. First thing, all the totals has to be checked. Okay, the totals has to be checked in terms of horizontally, in terms of vertically. Is that? The columns, the rows totals has to be accurate, the columns total has to be accurate, the group total has to be accurate. Is that? These are the things you are going to take all the precautions. Okay, in terms of accuracy, you are calculating again. What you will do, you will recalculate it. Is that? You will recalculate it. You will say that yes, you have done this. I will also recalculate depreciation for one sample of assets. For a sample of assets, the auditor will also do the recalculation to make sure that accuracy is there. Nobody is perfect. We cannot say that we cannot entirely rely on the system. That is the accuracy. Next, cutoff. The most important.
I have a question.
Pardon?
I have a question regarding the accuracy. So here it means they might enter the transaction like, wrong amount or what?
It's not accuracy in terms of what will happen. There are how many types of errors are there in accounting? There are 3 types of error. The errors is one of the errors, error of omission, the error of principle, the error of commission. These are the way we want. If we are talking about sequence number auto generated, definitely we will not miss. Okay, definitely we will not miss. In terms of principal, debits and credits, is it right? We have to make sure that, because debits and credits, something goes wrong, trial balance will not get tallied. Okay, trial balance will not get tallied. That is that. Why we are preparing trial balance. The basic purpose of preparing trial balance is to know the accuracy. Is it now the moment you can say that so many things comes into picture. Is it in terms of numbers, in terms of the amounts, in terms of any we are omitting a transaction, we cannot track it. Okay, but what are the precautions, what are the controls we are taking? We are taking that to make sure that all the transactions been entered accurately. We are saying that it is auto generated. Okay, now your question is whether which accuracy we are going. We will take the accuracy in terms of values. Is that we take the in terms of numbers, whether we have, see, omission. What is the commission? Commission is actually the amount is 10, but we enter 100. Is that it happens? Actually the amount is 100. We will enter 10. Now see, now what happens? Now the things are very advanced. Okay, all the experience has been included. Each and every time there will be some improvement will be there. Is that there will be some improvement will be there. But in spite of that, we have to make sure that amounts, see, the first thing what they are saying amounts, is that amounts and other data related to transactions. I mean, they are talking about the value amount of the transaction and data relating to the transaction even recorded appropriately.
So there's possibility of entering the transactions using wrong amounts, right?
Fine, it happens. It happens. You can. People are there. Now see the thing. I will give an example for that. Now what happens whenever you are making a transaction? Is that you are making a bank transaction? Fine. The moment you say that I am making a bank transactions of 10,000. Okay, you are making a transactions of 10,000. They will put. You are putting in value. They will put in words automatically. Then again they will ask whether you want to have a confirm. They will take all the reason you have to confirm it. Yes, it is. Once it is confirmed, then we'll take to the next case. Is it? These are the yes.
Classes of transactions and events. And it means income statement items or both?
Classes of transactions events means it all financial statements. It talks about income statement and balance sheet. Classes of transaction. I will go in detail about classes of transaction where I have mentioned that transactions pertaining. Yeah, classes of transactions. Is that classes of transactions is it? See, I have written here. It includes all. It is that it includes all. What are the, how we are talking about the assets, how you are talking about the liabilities, how you are talking about the equity, how income, how expenses in general. Is that classes of transaction means it is in general, which is going to cover the complete balance sheet as such. First we will start with in general. Okay, first we are starting with in general. Subsequently what we'll do, you see the thing, when we are doing the thing, then we'll go for account balances. Okay, then we'll say presentation and disclosure. Is that first we talk about a general perception of the assertions. Subsequently we will talk about the specific perceptions of the assertions. Is it clear to you?
Yeah.
Is it? This is the first slide. Okay, this is the first slide. We are just getting an idea what are what is the concept of assertions. Fine. Now, cutoff. Cutoff means the date. When the moment you say cutoff, it is nothing but straight away, there is no other option. We have to take into consideration date factor. Is that we have to be very sure, is it right, that it has to be done before reporting date or it has to be done after reporting date. Before 31st December or before 1st of January. Is that when we are preparing the financial statements, you have to make sure cutoff. This year transactions or events should not be there in the next year. Next year transactions and events should not be there in this year. The moment we say cutoff, cutoff is nothing but it is a direct and simple understanding about the date on which we are preparing. Most of the time, when you are saying that yes, sometimes what will happen, you are receiving the amount this year before 31st. You should not take into consideration in the month of January. You have to differentiate. Is that transactions and events have been recorded? See what they mention. They mention in the correct accounting period. Is it correct relevant accounting period? When you are saying cutoff basically talks on which date you are preparing. 31st December, 31st March, 30th of June, wherever is there. When we are preparing the financial statements, that date will be identified as a cutoff. Okay, and we will cover this in so many ways. Fine, are you clear about this? See, put the numbers. Okay, I will make sure that things will work on that. Okay, 1 2 3 4 5. Be very clear about the concepts. Is that you should not mix up one with another. That's very important. What the classification and events are recorded in the proper accounts. Is that, see, this is the one thing that happens, that is the point of discussion, and mostly we will cover this in every subject of ACCA. Every subject. Now the things are what we are talking in terms of what is the capital expenditure. Is that capital expenditure and revenue? I'm not going in detail on examples. Okay, I'm just giving you a cover up of that capital and revenue expenses. Okay, we are talking about the second part, current and non-current. Is that current and when we say current and non-current, it applies to assets, it applies to liabilities. Here also it applies to assets, it applies to liabilities. That's classification is very important. Okay, classification, current liability and non-current liability, current assets and non-current assets. What is the capital expenditure? What is the revenue expenditure? Is it right? These are the things that very recently, the International Accounting Standards and Financial Reporting Standards are highlighting on this issue. Is that if you see the recent updates that has been happened over a period of time, what they are saying that means you should be very clear about classification. Capital expenditure, revenue expenditure, which one has to be capitalized, which should not has to be capitalized. If you take into consideration IAS 16, is that IAS 16, property, plant and equipment. Property, plant and equipment has been clearly defined. The set of criteria is there on property, plant and equipment, that which item, how we have to capitalize. Is that even they will say, if you take into consideration IAS 23, these are all the things which we are going to cover subsequently in the questions. Is that IAS 23? IAS 23 talks about the borrowing cost. Is that IAS 23 talks about the borrowing cost. Which cost, when we have to capitalize the borrowing cost, when we should not capitalize the borrowing. There is a specific criteria. We are not going in detail about criteria, but I am telling you that why classification is important. It says that transactions and events has been recorded in the proper accounts as such. Okay, proper accounts. Otherwise, what will happen? Definitely, the entire picture, the entire framework of the financial statements will change. Is that these are the 5 things. The first one, general classification of events. Okay, occurrence, it has to be occurred and recorded in the entity books. Completeness means all transactions events should be recorded. Accuracy in terms of the amounts and data. Cutoff in terms of date, and classification in terms of the specific elements, okay, where it has to be done. Is it clear to you?
Yeah.
Fine. Next. What it says that now coming back to slowly and steadily, account balances. Every other account will have closing balances. Is that every other account will have closing balances. When you are going to say closing balances, is that existence? Is that the closing balance when you are talking about balances at the period end? Okay, balances at the period end in terms of assets, in terms of liabilities, in terms of equity. This is what we are talking in terms of financial statement of financial position. Is that financial position? In statement of financial position, all the things will be your closing balances only. Okay, closing balance. First, we have to say what is the account balances. Whenever you are talking about, we will do this substantive procedures. In the substantive procedures, what is the first procedure we are doing? The first procedure will say that whatever the closing balances of last year, is that whatever the closing balances of last year should be carried out as a opening balance of this year. This is the first procedure you will do. This is the first procedure we will do. Means first you should know whether we have taken the last year balances as the opening balances of this. What is the last procedure we will do? If in any way in the last procedure we are doing the reconciliation. It's a reconciliation. When you are doing the reconciliation, you are reflecting that all closing balances has been reconciled. In between there are so many procedures are there. Understand? Now you understand the procedure. Procedure is not, people think procedure is very, very difficult. No, what is the procedure mean? What you are doing, that has to be reflected. Means when you are talking about the assets, liabilities and equity related to financial statement, is it related to financial position, we have to make sure that the opening balances and closing balances should exist, and it has to be same. Okay, the first thing. Now when you are talking about the account balances, this is the first one. See, in some cases there are 5, in some cases there are 4, in some cases there are 3. Okay, I have sent you one word file. Okay, I have sent you one word file regarding assertions. It is a complete, you have the complete information on that. Okay, very summarized one. Now come when you are saying rights and obligation, definitely what is the right? Right is nothing but the ownership. Okay, rights is nothing but you are going to say that I have owned this. Definitely when you are, the client will say that they have owned it. Immediately they will ask you, you will ask as a evidence. Okay, you will ask as a evidence the ownership title deed, we will ask. Okay, you will ask ownership title deed. It says that yes, the entity has the ownership. You will ask invoice. Is it right? You will ask invoice, whether the invoice is there. It shows that ownership. You will say what it is the existence. Is it right? If the existence is there, then you will know it is that they have the right and obligation. It is that they have the using rights. They can they use it? Then it is a rights. Means when you are saying that I am having an asset, I am having a liability, or I am a equity, You are going to prove that yes, it is by you or it is not. You are saying that receivables. Is that you are talking about receivables? When you are going to receivables, you will say whether you have the rights or not. Sales has been occurred. Is that sales has been occurred? You will get the confirmation from the client. Then definitely it gives you evidence that there is a receivables. You have the right over the receivables. You have the right over the assets. Is that you have the right over the assets? You have the right over the liabilities. You have to pay. Is that likewise the entity holds or control the rights to assets. Is that most of the time what have property, plant and equipment? It is not a small amount. It's a major portion on the asset side. Okay, major portion on the asset side. We have to be very cautious. You have to take the evidences in all aspects. And in terms of liabilities, payables, loans, is that loans? What happens? Here's the thing. You have taken the loan from the client has taken the loan. Sorry, client has taken a loan from the bank. What you will do? You will get confirmation from the bank. You get the confirmation, written confirmation. Is it right? Oral confirmation and written confirmation. What we have done in the last session. Is that we'll get a written confirmation. Written confirmation, if you are getting there is an obligation to pay the loans. Is that there is an obligation to pay the loans. This will provide more substantial evidence for our to understand. Is it? This is where we are talking about. We are talking about the rights to assets and liabilities and obligations of the entity in terms of liabilities. Okay, that's the second part. The third one, same thing, completeness. All assets, liabilities, and should have been recorded. Have been recorded. There should not be anything which is missing. Is it right? There should not be anything. Completeness is very important. That we have to make sure that for a sample of assets, I'm using for a sample of assets, we should make sure that it has been recorded from the beginning till the end. Is that from the general entry? Is that completeness? I am saying from the general entry. Is it right? General entry till trial balance. Is that till trial balance? And subsequently till financial statements. The entire process has to be reviewed. See, we are nowadays, it is all IT related, okay? It is all IT related. But even for that course also, it has to, from examination point of view, it has to be written like this. Is that next? What we are doing, the third one with respect to is valuation and allocation. Is that assets, liabilities and are included in appropriate amounts, and any valuation or allocation adjustments are appropriately recorded. See, something I have see, it is very much important for me to refer IFRS and IAS. Okay, maybe you because of exemptions you have not done financial reporting. Is that? But financial reporting, that is F7, this is F8. F7 is all the equally important. Okay, some wherever I have to give references so that you should understand what happening. Is that when you are talking about the valuation and allocation, is that allocation of expenses? Is that allocation in terms of what? In terms of what is the capital expenditure and what is the revenue expenditure. Revenue expenditure should be reflected in profit and loss account. Capital expenditure should be reflected in statement of financial position. Very important. Valuation. When you are talking about the valuation, property, plant and equipment, especially we are talking in terms of property. Is that especially? When you are saying property, again, is that property related to the business? Is it right? Property related to the investments? Property related to the business. Property related to the business is IAS 16. Property related to investment is IAS 40. Now, what happens in these cases, especially with respect to land, when we are saying property, it is land and buildings. We have to be very specific. There is no ifs and buts, okay? When you are giving the example has to be very clear what we are discussing and what we are talking. When we say it's a land and building, definitely land value will increase. Is that land value will increase? When the land value increases, we have to make a revaluation. IFRS 13, fair value. Is that? IFRS 15 talks about the fair value. When you are talking about the fair value, definitely the value of the land will increase. Is that value of the, whenever the value of the land will increase, is that whenever the value of the land will increase, it has been shown in the other comprehensive income, revaluation gain or revaluation loss. We will not say revaluation loss, we will say impairment. But when we are talking about the thing, we have to make it is a revaluation gain. Yeah, I'm just giving an example. What is the valuation? Is that this is a background information? Is that whenever I say background information, that supports your understanding. That's all. Okay, that supports your understanding. Okay. Now, assets, liabilities, and
Do we have revaluation loss, or it will be impairment?
Impairment.
Okay.
Is it right? Revaluation loss is the we
It's
unfortunately.
mentioned business and investment there
Pardon?
in red. So property for business purpose and for investment purpose, right?
Yeah, investment purpose. If it is a investment purpose, it is IS 40. Is it? If it is for business, it is for IS 16. Is it clear?
So this is only for land and building, or for full property and equipment?
This is for, see, most of the time it is land only which has been revalued. Okay? Most of the time it is land, property, but we'll say property, plant and equipment.
Okay.
Okay? We say it's a property, plant. This I am giving you a background. Okay? This I am giving you a background because you have not covered F7 in detail. If we have covered F7 in detail, each and everything has been clearly stated. Okay, this is for your understanding. This is not related to the examination. Okay, this is not only for our background, basic. We have to work it on. Okay, now coming back to this, you will have what valuation? Valuation will be done. Okay, valuation and allocation. Allocation in terms of the expenses. Is that depreciation? Whether we have allocated correctly or not. Okay, where we have allocated correctly or not. We have shown it in the correct profit and loss account during the period. Is that everything will come slowly and steadily. We are talking valuation in terms of assets, liabilities and equity. Included in financial statements, first we are talking in terms of the amounts. Okay, first we are talking about the amount and resulting and allocating adjustments or appropriately recorded. When you are saying allocating adjustments, if it has to be shown in the profit and loss account, it has to be shown. If it has to be shown in the statement of financial position, you have to show in statement of financial position. Is that? These are the 4 assertions. Okay, 4 assertions. See, I am telling you in beginning only. People find students this is little bit difficult. Okay, students find initially, but once you are doing the things, it will make sense. Okay, where there is a difficulty, I will tell you in advance. Okay, so what you have to, existence, it should exist. Rights, ownership rights, obligation, payment rights, payment things, completeness, it has to be recorded completely from beginning till the end. Valuation and allocation should be done as per the rules. Is that this is the second one? Next, when you are talking about the presentation, is it right? When you are talking about presentation and disclosure, is it? Now, when you are saying it's a presentation and disclosure is nothing but disclosure notes to the accounts. Is that disclosure is notes to the account. Now, what happens? See, when you are disclosing, you are presenting in your financial statement. For presentation is presentation in the financial statement. I am writing FS, okay? Presentation in financial statement. What happens? See, when you are doing the thing, financial statement assertions, make it very clear. Financial statement. Occurrence and rights and obligation, two different things are there. You have to disclose the events when it has been happened, transactions and other matters occurred and pertaining to the entity. So many instances will happen when it is not related to the entity. I will give a simple example of property, plant and equipment. One, when we say property, plant, equipment have three different classifications. The first one you own, the second one you will take on lease, the third one you will take it on rent. Got my point? You have to make sure that how much you have. If you are taking owning, you have a different treatment. Leasing, you have a different treatment. Rent, you have a different treatment. In the similar way, I will give another example with inventory. Is that when you are saying inventory also will be at your own location. Is it right? It will be at your own location. Fine. Is that some inventory will be there in third party location. When we say third party location, some inventory will be there in warehouses. Now you are having a concept of people provide service for warehouse also. Is that people will provide service for warehouse. Some inventory will be at your own location. Some inventory will be at the third party warehouse. Some inventory will be in the transit stage. So you should know, is that whether the inventory it is at the third party, you have the rights over that inventory. Because inventory also constitutes a good percentage of the assets. Okay, good value of percentage. That is what it says. It should occur. First, it should occur means you should buy it. Okay, it should be in the name of the entity. Very simple. It should occur in the name of the entity. It should occur whether it is a own, it is a lease, or it is a rent. Then you should have the rights and obligations. Is it? Now, that's what it is. You have to disclose the events, transactions and other matters pertaining to the entity. This is the first one. The second one, in terms of disclosure. Disclosure also, it has to be complete. See, we have not given that much importance to the notes to the accounts. Is that in our academic curriculum, we don't focus. We'll focus, but the thing is notes to the account. But from the auditing point of view, notes to the accounts is very important. It gives you a summary. It gives you all disclosures. All the things should be disclosed in a summary format. We are not talking about in detail. In a summary format, that should be included in the financial statement. That is the reason whenever you take any item of things you take in terms of sales. Okay, they will say sales is 20,000, but in between what will happen? You will come across something called as a note. Is that they will say note number 6. In note number 6, they are talking about the sales. They are talking about the summary of, this is the disclosure. The moment you say note 6 is nothing but it is the disclosure which has been mentioned at point number 6. Is it? In that is the reason. Any item, you talk about non-current assets, property, you talk about current assets, receivables, payables, non-current liability, long-term loans, everywhere there will be a relevant reference number to the notes. That is nothing but the present disclosure. All disclosure should have been included in finance, have been included. Whatever you are showing in the financial statements, that has to have a reference number of the note. Okay. Third one, classification and understandability. See, basically, when we are going to say, is it right? I will give same again example. You will have non-current assets, you have current assets. Is that you have investments? See the thing, you will make as investments. In current assets, you will write very specifically short-term investments. Short-term investments, that's why current assets, current means it should be less than 12 months. Understandability is there. Non-current assets more than 12 months. Fine. That's what we have to make. You cannot mix it up. Okay, we cannot mix it up. Current assets with non-current assets or non-current assets with current. Similar happens with respect to liabilities also. Current liabilities and non-current liabilities. Is that we are talking nowadays? If you see the changes that has been happened, is it right? You will have that depreciation. Is it in initially what you have done depreciation? You have done depreciation in operating expenses. Is it? But now what happens? Depreciation is not shown in operating expenses. Depreciation will be shown in cost of sales. Because it is related to the production activity. It is related to the plant and machinery. It is directly related to the production activity. Anything which is directly related to the production activity, we are going to show in the cost of sales. This is what it says. Financial information is appropriately presented and you have to describe it. It's not like that only we are showing it as a short-term investment. You have to mention, disclose in your notes to the accounts why we are putting short-term investment here. Is that you will have some more another thing. You will have marketable securities. It is a current asset, is right? It is a current asset. You have to mention, yes, what? See, then only it will be more clear for us, is it right? And should be what they say. This should be clearly expressed. There should not be any confusion whenever we are mentioning this in the presentation and disclosure. The fourth.
Regarding presenting the depreciation in the under cost of sales, this is classification, right? Or this is allocation?
It comes in classification as well. Allocation means calculations. Is it right? Classification, okay. Allocation means calculation. Classification means where you are going to show. Okay. Classification means where we are going to show in where we are classifying, where we are reflecting. Is it clear?
Yeah.
Accuracy and valuation. Is that accuracy and financial should be fairly at an appropriate amount? Is that the moment we say accuracy, mathematical accuracy, sequential accuracy, okay? Accuracy means row accuracy. Now you can have column, row-wise totals, column-wise totals, mathematical accuracy, sequential accuracy, okay? Those things we are talking in terms of those. Is that in simple terms? I will again write. Now you will see, you will come across the same thing in terms of trial balance. Valuation, if you have done any revaluations, is it valuation? Definitely valuations will be plus, valuation should be minus. There will be, in sometimes what will happen, there will be impairment of assets. I am just mentioning this. It's not important, but for your understanding as an audit profession, I am mentioning this. It is very much important for us to know. When we say impairment of asset, it is IAS 36. Is that it is IS 36. Is that we should know. If we are talking about a valuation, we have done already IFRS 13, fair value measurement. Is that if we take into fair value measurement. In the examination, if there is time permitted, if you have that, if it is going to trigger at that moment, and if it is time permitted, better to write down. Okay, I am saying that it is time permitted and it should trigger you. That yes, where if they are talking about reval. Is that now these are the four assertions: occurrence, completeness, classification, and understandability. And the fourth one is here they have mixed, they have combined it. Okay, they have combined it. In the previous case, what we have done, see the thing, they have made occurrence separately and rights and obligations separately. Here what they have done, occurrence and rights and obligations, classification and understandability also. Is it right? Classification is different. There is no understandability. Is it right? There is no understanding. Now they have made classification and understand. Accuracy and valuation. Is it right? Accuracy is separate. Accuracy is separate. Valuation is separate. Is it? They have put the things in together. Okay. Now these are the things you should know. There is a class for the events, for the balances, and for the disclosures. Okay. Some more we will cover. Slowly and steadily we will cover some more things. Maybe in the question answers we may cover something which have not been here, but we will cover. Okay. Now, what the examination, this is the exam question, is it right? Explain 4 financial statement assertions. Is that financial statement relevant to what? They mention very specifically, relevant to what? Relevant to accounting balance at the period end. This is the where there will be some doubt in the minds of the students. The moment what the question they are asking, they are talking about the financial statement relevant. Is that this is very important. Well, they say that it has to be relevant to what? It has to be relevant to account balances. What are the account balances? Existence, rights and obligations. You have completeness and valuation and allocation. First, note the requirements of financial statement. Explain. Is that? See, so simply writing down 4 financial statements will not give you full marks. You have to make it 2 columns. First one you have to put they say they have asked very clearly in the question. They say it is explained. Is that? They say it is explained. The first column is we are identifying. The second column is we are making a brief explanation. Is it right? Brief explanation. It says, finally, most important, the financial statement assertion required to those related to account balances at the period end. It is imperative, compulsory, therefore, that you do not confuse these with other assertions, classes of transactions. This is a common area of confusion. I told you before also, okay? I told you before also. Take those yellow sheets, is it right? Slips will be there. Is it right? On the yellow slips, just write down this and stick where you are on your table. It makes easy for us. Just whenever there is a way, we can revise this one. Okay? We can revise this one. What they are saying, see the thing. The same thing they have repeated, okay? They are talking about the existence. They are talking about rights and obligations, completeness, valuation and allocation. Just read these things on your own, and once it is completed, please tell. Is it over?
Yeah.
Right? What it says, is it what it says? We have talked about audit evidence and what make good evidence. We have link, or what we have to do? We have to link the evidence with assertions. Separately, we have talking about evidence, and separately we are talking about assertion. Now, what happened? We have to link. That's where the exam question comes. Now, we need to understand how we get the evidence. Once we are getting the evidence, we have to support also the financial statements. What procedures does the auditor need to undertake? Is that what to obtain the evidence? What are the procedures we are getting the evidence? Okay, one side we get the evidence, one side we get the assertions. Now you have to mix it up. Is that first we need to understand the two types of test an auditor can carry out. What are the two types of tests? The first one is test of controls. The second one is substantive procedures. Okay, both are different, and keep it in mind. Somewhere it will ask. Okay, test of very simple one. Is that very simple? See, where the assertions I told it is difficulty. I told it's little bit you have to be cautious. Test of control, substantive procedures are easy. Is it? What is the test of control? Test of control is nothing but you are want to know you are performed to obtain evidence about the operating effectiveness of controls. Controls are effective or not is a test of control. Okay, controls are effective or not is a test of control. As simple as in preventing, in detecting, and or in correcting material misstatements. Is that test of? Now you see the thing. Now you go to the thing. What is the test of controls? How it has to be done? You have the test of controls. You are going to say it is the rights. Is that it is the rights? You are going to say that it is rights with respect to property, plant, and equipment. You will see whether there is a proper procedure has been followed. Is it proper? First, when we are talking about proper procedures followed is first there is a proposal is there. Once there is a proposal, there is a approval is there. Once there is a approval, then there will be a placing of the order will be there. I'm just maybe I'm missing something. Okay, I'm just telling what is coming to my mind. Okay. Then we have received or not will be there. Is it right? Then you have paid or not will be there. Then you are doing the reconciliation. Then you will say whether you have done valuation. Is it right? Then you have done valuation. Can we have applied correct depreciation or not? Is that we have done correct depreciation or not? Then subsequently what we'll do the reconciliation. Test of control, we have to say these are all the controls. Is that we are talking about all the things. Example of this is that where approvals are there. We will test, yes, everything has going in smoothly or steadily. Is that is what if there are controls, we are testing the controls only, whether controls are effective or not. Don't get confused. There is a complete difference between these two. What is the substantive procedures now? Is that substantive in the examination? As a matter of fact, with my experience, they will give question on test of controls as well as they will give substantive procedures. They will give almost 20 marks. Okay, 20 marks. They will divide these 20 marks. Okay, the 1, 5, 1, 6, 1, 4, 1, 5 like that. Is that they will divide the substantive procedures, almost 20 marks will be there. Is that test of control? They will ask you in a scenario based questions. Is that what is the substance? These are the procedures. Is that these are the audit procedures to detect material misstatements. Anywhere anything is happening, just imagine from proposal, approval, placing the order, receiving, payment. Is it right? Payment is there, then revaluation, reconciliation. Anywhere there is some plus or minus is happening, immediately what you will do, you can deduct Is that if everything is fine from beginning till the end, you will not have any material misstatements. Is that we will not have any material misstatement. Why we are doing substantive procedures? To is a procedure to detect material misstatements at the assertion level. Is that at the assertion level, occurrence, valuation, rights and obligations. Is it at the assertion level, whatever the assertions, is it whichever assertions are applicable, whatever the situations, is it as the assertion level we will say. Now you will say the thing. We will take the things what here. You existence is there, fine. The assets are exist. Then you will see rights is there, yes we have owned it, fine. Then they will say it's a completeness, it has been recorded. It has been recorded in the correct accounts, yes it is there. Then we'll say that is valuation and allocation is there, we have done the depreciation, we have done the closing balances at the year end, fine. If we are doing the things, automatically what will happen, if from beginning till the end it goes fine, definitely we are not, there is no material misstatements and we are done the procedures. We are using the assertions and based on the assertions we will do the procedures. Is that based on the assertions we are doing the procedure, including test of details. We are doing that existence, occurrence, valuation, completeness. We are doing all the things in detail. Is that for what we are doing? We are talking in terms of various things. The one we are talking about classes of transactions. We are doing in terms of account balances, we are doing in terms of disclosures and any analytical procedures also we are doing. Now keep it in mind, test of controls is nothing but to get the obtain evidence for the operating effectiveness of the controls in preventing, detecting and correcting. Whereas substantive procedures, I will let you know that you memorize this, okay? You memorize this both the things, okay? I'm not saying that you have to memorize by word. Conceptually, when you are writing in the examination, the meaning should not change, okay? The words can be used in your own way, but the meaning should not change. Remember, substantive procedures must always be carried out. Always we have to do substantive for material classes of transactions with having whichever is having value, whichever is having amount, account balances and disclosures. Is that account balances? They must always be carried out. That is the reason I put like this. I put 20 marks for that. Substantive procedures. And I will ask you, we will cover this in more detail. Is it right? It is, once we have command and control over this, subsequently other things will be little bit easy for us. Okay? Test of controls and substantive procedures. What they say, these are auditors are required to obtain sufficient and appropriate evidence. Test of controls and substantive procedures. Define what is test of control and what is substantive procedures. How many marks they gave? They gave only 2 marks. Is that now if you take into consideration, if you from the MCQ point of view, again they will give only one question. Okay, they will give only one question. Okay, see MCQ again I am saying, now again I am revising this. Is it MCQ? You have how many questions? One question will have five different questions. Is it right? Every question will have 5 sub questions. 2 questions will be based on concepts and 3 questions will be based on applications. Plan the things. That's the most important thing is you should know how the things are working. 2 questions will be on concepts. 3 questions will be on application, plus or minus. I am not saying that. Sometimes it will be 3, sometimes it will be 2. Okay, sometimes it will be 3, sometimes it will be 2. But more or less that this combination will work. Is that what they are asking? What they are asking about define test of control and substance. The same thing, is it? Test of control is, I have to, please read this one. Once it's done over, please tell. Is it done?
Yeah.
Yes, sir.
Okay. See, whenever I am saying read, okay, whenever I say read, I will say because you should have you have to get that language on that. Okay. If there is a possibility, is it? I have gave you, I send you the question papers also. If there is a possibility, you open separate file for question papers for each. If it is June 2019, if it is for December 2020, like that, separate Word file you open it. Put, is it right? Put question number, you say A, B, C. Is that you will have A, B. If you have covered this question, write down this question. If you have covered this question, write down this question in the Word file. Okay. Wherever we have covered, whichever concepts we have covered, write down those things. Whichever not covered, just wait for till it is going to be completed. Is that till it is going to be completed? Once we complete question number C, assume, then write question number C. Is that if you have not completed question number A, leave like that only. Nothing will happen. When we are covering that, the moment you remind it and complete it. If you follow this, you do maximum. Is that anyhow? I am doing 4 mock exams. Okay, I am doing 4 mock. You do 1, 2, 3, 4 question papers. You do 4 on your own. We do 4 together. Automatically, you will get an idea how the things have to be and how it has to be worked.
You
Okay.
mean total 8 exams?
Maximum, alhamdulillah, that's more than sufficient. Is that we are doing 4 mock exams. You are doing 4 question papers. Then we are doing question bank. We are doing, by the time we do question bank, we are covering all the questions since almost 2012, 13. We are covering till now. Is that we are covering from that to till now. You are covering a substantial things. Okay, we are covering.
But we will do 4 with you, right?
Pardon?
We will do 4 with you.
I will do 4 question papers. I will do. Already I have sent you now.
What about the answers of the 4 exams which you said we have to solve by ourselves? You said 4 we will solve.
You will do it if it is possible. You do it. You do it and send me. I will review it.
Okay. What about the questions which we solved previously? I mean the full questions, or the kit. You can't share it, right? So we can solve it, or we will solve it together.
Which one?
The one which we did previously.
I send you a PDF file for that now.
You sent Word copy, I think, right?
Yeah, Word copy I send, and I send that link also, video recording also I sent.
Yeah, with the question which we solved only, right? What about the other questions? We can't solve them.
As and when we will solve, I will forward it. Okay. as and
Okay.
when, because it is a e-book, I have to.
Yeah, yeah,
You got my point?
yeah.
Is it right? As and when we'll solve. I see whatever I am doing, it is for you only, you people only.
Okay.
Okay? Is it clear? Now, here are the ways in which external auditor obtained the evidence. What are the different ways? Okay, we'll complete this and we'll stop. Okay, you will do inspection, observation, inquiry. For all these, they have given explanation in the subsequent in the slides. Okay, confirmation. What it says, inspection. You are inspecting. Inspection can be applied. Where it is applied, it applies to tangible assets and also documentation or records. Is it? You are inspecting property, plant and equipment. You are inspecting when there is a counting is happening, you are inspecting. Is that? You are inspecting physical inspection. Is that? Especially they say it is talking about tangible assets. Any documentation is there, you will see as an evidence. Is that? You will see as evidence. Any records are there, you will see as evidence. Okay, you will inspect those records, you inspect those documents. Is that? You will inspect those records, inspect your document. Inspection, what they make it more clear on this. Inspection tangibles that are recorded in accounting forms confirms existence. When you inspect, it means you are making a confirmation of existence, but does not necessarily confirms rights, obligations or valuation. You are only having the existence. Okay, confirmation that assets seen or recorded in the accounting record provides evidence for what? It provides evidence for completeness. You are seeing, is it a, whatever it has been there in the record, you will see what has been exist. You are not talking about for other things. There are separate assertions are there. Is it right? For example, sample of record assets recorded non-current asset register. See, this is again first time you are doing this. Whenever you are talking about non-current assets register, the moment you purchase a non-current assets, any client purchasing, what they will first they will write down in register. Is that? They will think in terms of general entries. The first source of information. Getting my point? The first source of information. The first source of information with respect to non-current assets is non-current asset register. You have to write down in the register. That's the second thing. Follow second. Is it right? For a sample of assets recorded on the non-current assets register, physically don't mix up with ledger. Ledger is different. Non-current asset register is different. Okay, ledger is different. Physically inspect these to confirm the existence. For a sample of fixed assets, okay, physical assets. So a sample of it, trace this back to the again means what happened? You are talking from the register till existence. Is it right? See the thing. First you are doing, this is the first step. You are going from register to existence. Again you are going from existence to register. Is that? Trace this back to the non-current and accounting records to make it a completeness. First we are talking in terms of what? First we are talking about the existence. Is that? Second we are talking about what? Second we are talking about the completeness. Is that? This is what? Now you can say quantity of information. When you say quantity of information, definitely we have to prove the evidence is right again and again. Okay, you have to prove the evidence is right again and again. What you are doing? Inspection of documentation. Inspection of document can involve both internal records and external records. Okay, you are inspecting the document. include what they say, they are making very clear. It is in the form of paper, it is in the form of electronic or any other forms. Is it? Why we are inspecting the documents? We are procedure provides evidence with respect to, we are thinking in terms of reliability depending on the nature. And what apart from that, sound and effectiveness of controls. See, you are having good documentation, is it? You are having a client is having good documentation. It means the internal controls are effective. Is that the internal controls are? You are everything you are putting in a right place. The things will not be plus or minus. Is it right? What when you are making an inspection of the documents, it provides a reliability with respect to what? Source of effectiveness of control. Inspection of documents or records can provide evidence for what? It provides evidence for existence only. Is that existence only, but not ownership? Is that? But not, they say very, it provides for ownership. Inspect the minutes of the board meetings. I told you that just now. I told you that you are talking in terms of property and plant and equipment. One of the evidence is you are reviewing what? You are reviewing the board minutes. Board minutes, meeting minutes, okay? But there is a huge amount of cash involved, is it right? Then definitely it has to be have the approval of the board, is it right? Anyway, you have to inspect the minutes held during the year, whether there is a authorization of new property purchased. Is it? You have new property purchase. The first one is what? The first one is inspection. Okay? Inspection of tangible assets, inspection of documents. Is that second one? Is that this is the second one? What we are talking about? Observe. About what? Watching the. You have to observe how you happen. You are just standing there and you are observing. Is it right? What is the example? It says that observe watching the procedure or process. Is it right? However, it is of limited use since it is only confirms. There is not that much you are going to gain from this. Is it right? We are not going to gain that much from. It is only for limited use. Is it right? That the procedure take place when the auditor was watching. And because the act of being observed could affect the procedure or process to be performed, whether they are doing right or wrong, they are doing rightly or not. You have to observe. Is it right? What you will observe? Example, you will observe the staff carrying out the year-end inventory count. Is that how they are counting? You will observe whether is it right? You will observe. It gives you it provides evidence that counters are adhering to the inventory count instruction. Why you are observing that? When you are observing inventory count, is it right? When you are observing inventory count, you will say that whether they are following the count instructions or not. Means they are doing again. They are following the procedures or not. Specifically, see, it's a very easy. Specifically, for every specific activity, there will be some assertions will be there, and there some procedures will be there. You are inquiring, okay? You are inquiring. What you are doing inquiring is that this is the third one, okay? About information from client staff or external sources. Is that the strength of the evidence procedure depends on the knowledge and integrity from source of information. Either you are inquiring from the client staff or external. If you are getting from the information, it is internal. If it is getting from external, this will be more strong. This is comparatively weak. Comparatively weak depending on the things who are giving. Okay? The strength of the evidence depends on the knowledge and integrity. Inquiry does not provide sufficient evidence. You are just inquiring that to detect material misstatement at the assertion level. Or not it is sufficient to control. You are just inquiring whether it is there or not, internal sources or external sources. But it doesn't mean that inquiry gives you some strong evidence. Make inquiries to ask them questions. How the slow moving and inventory is identified. Inquiring, asking, discuss them. Okay, that how it is going to be identified or it has going to be accounted. Is it clear to you?
Yeah.
If you give me 5 to 10 minutes, inshallah we'll complete this. Is it okay?
Yeah.
Okay, so that we can start new lecture and the next class. Confirmation, simple things. Nothing is there. Okay, confirmation is obtaining a representation. Is it confirmation? Obtaining the representation, written confirmation. Okay, mostly which confirmation? It is a written confirmation from the external, directly from the third party. What is the confirmation? Confirmation for our bank balances. Is it? For a sample of year-end receivables, we also get confirmation from receivables from other third parties. Okay, that balances. See, we are showing in the financial statement we show 20,000. In the client book, we have to make a confirmation that it is going to be 20,000 or not. If you are getting the confirmation from the client 20,000 and our financial statements 20,000, means it is a positive confirmation. Is there obtained confirmation from the customers balances at the existence and rights and obligations of the year-end receivables. Means when we are getting the confirmation, definitely what happened, I am writing here in terms of receivables. Then we'll say that yes, we have a right over the receivables. We do recalculation. Is that a recalculation? See, that recalculation involves checking the mathematical accuracy of documents and can be undertaken through the use of information technology. What are the things we will recalculate? We'll recalculate the amounts in the register to know the accuracy, is that which has been disclosed in the draft financial statements. Okay, before it has been audited, that is the reason they say it's a draft financial statements. We do the recalculations for only the total reperformance. What you are doing reperformance, they will do a reperformance of independent procedures or controls that was originally performed as part of entity internal controls. For example, what you are reperforming, there are so many things are there, is that you again auditor will do bank reconciliation. Okay, again the auditor will give bank reconciliation to know that it is to confirm accuracy and completeness for the bank figure. That's right. We are doing reperformance to know for the bank reconciliation to make sure that it is going to be accurate and it is going to be complete.
The reperformance is always for the test of controls.
Pardon?
Reperformance is always for test of controls or for substantive procedures as well.
Substantive procedures also.
Both of them.
Is that substantive procedures? We are doing reperformance. Okay, we are doing reperformance for depreciation. Is that you are doing for the depreciation? You will do for anything, whatever they have done. See the thing. Whatever they have done. Is it that originally they have done? Okay, originally performed by the entity internal controls. Okay, originally performed by the entity's internal controls. Again, you are doing the same thing. It will apply to bank reconciliation. Is it right? It applies to bank reconciliation. It applies to just now it is there. It applies to depreciation. Is it? It applies to revaluation. Is it? It applies to revaluation. It applies to all the things that is already they have done. Again, we will do it for sample of events.
So what's the difference between reperformance and recalculation? Recalculation is only about checking the mathematical accuracy, right?
Yes. Is it?
And this will perform the full process.
Yeah, recalculation is only the mathematical accuracy. Is it? Mathematical accuracy. I told you, recalculation is row totals. Is it right? Recalculation is column totals.
And reperformance, it includes recalculation as well, the full process.
Whatever you have done, whatever the client has done, we are going to do the same process again on our own. Client has prepared reconciliation. Is it right? Client has prepared reconciliation. For that, assume the client is maintaining 4 accounts. They have done reconciliation. You will pick one account. Okay, you will pick one account and you will do reconciliation for that bank reconciliation. Same process you will do. Then you will see whether what you have done and what the client has done, is there any difference? Then you will come about, if there is any misstatements are there, you will identify. Again, coming back to your question, is it right? Coming back to your question, what reperformance includes, is it right? It also includes what? It also includes accuracy. Is that means what you are doing? Accuracy means, it means we are doing, in other words, this recalculation is inbuilt. Recalculation is an inbuilt feature of reperformance. When you are doing reperformance, automatically you are doing recalculations.
Okay.
Is it clear?
Yes.
Analytical procedures. Okay? Analytical. The moment it is done, just tell me, I will stop if it is done. Okay? Analytical can be used for substantive tests. See what happens where we use analytical procedure. We are comparing financial and non-financial data. Plausible relationships. Plausible means we are stopping and we want to know. Okay. Now, what is the analytical procedures? They will see what happens whenever they will always give for 2 years. 2022 to financial statements. 2023 is current year, the 2022 is the previous year. Always we compare whether there is something plus or something minus. Is there any fluctuations is there? We will see. Now, take an example. Non-current assets has been increased. Is it? Non-current assets are, because non-current assets increasing, the various things are there involved. There is some additions are there. Is it? There will be some disposals are there. Is it? There is some disposals are there. There is some additions are there. There is some inventory which is not using. Is it right? Which is not used. Now, definitely, if non-current assets are increasing, what are the impacts will happen? You will make sure that if non-current assets are increasing, the depreciation amount will also increases. Is it? This depreciation amount will also increase. Something is happening. Definitely there will be an impact on the other side also. They also include, what they will do, analytical analyzing. Analyzing is nothing but you are investigating. Fluctuation, changes. Is it? Investigating the changes and relations that are inconsistent. If assume non-current assets are increasing and your depreciation amount is decreasing. It happens. Non-current assets are increasing, depreciation amount is decreasing. It happens. You should ask me how. Can you have any idea about this?
If they sold part of their properties.
If property, plant and equipment is increasing and your depreciation is decreasing, how it happens? It happens. You will have in property, plant and equipment, you will have buildings, you have land and buildings. Land, no depreciation. Land value is always appreciate. Land value is always appreciate. Buildings will get depreciated. Plant and equipment will get depreciated. Okay? But if the land value is only land value is increasing, only land value is increasing, we will never ever calculate depreciation on land. Okay? Now, land value is increasing. Definitely non-current assets will also increases. Is that non-current assets also increasing? But it's not related to depreciation. Is it right? That means what I want to say is there is every combination. You should go, you have to investigate. Is it right? You have to investigate what are the reasons. That is what important. They also include the investigation of fluctuations and relation inconsistent. This is inconsistent. Is it right? People will not rely, will not, this is not relevant also with other information or deviate significantly from your predicted amounts. Means these are the situations will be there. What is the analytical procedure? It is the investigation. Example, proof in total of depreciation charge for the period. Compare this to the actual charge in the draft financial statement to whether the charge appears accurate or complete. We are doing proof in total. Okay, we are doing the total. We are doing the total of depreciation. Is it right? We are doing the total of depreciation. It is related to profit and loss account. And we are seeing in the asset side that this total and the non-current assets minus depreciation, these two amounts are same or not.
So we are comparing the expected depreciation expense with the actual
expense. Is it right? Expected with the actual. If there is
perform a proof in total of depreciation, it means comparing the expected with the actual, right?
100%. Analytical means comparing only. Okay, analytical means comparing. You are comparing the actual charge in the draft financial to assess whether the charge appears accurate and complete. You are making a comparison. Okay, you are making a comparison. Depreciation proof here the total is right and here the total is right. If both are right, definitely correct, then things will work. Anyway, when you say analytical, we are comparing two different values. Is it okay?
Yeah.
What they say, it is imperative, it is the most that you understand, it is very much important that you should understand difference between test of controls and substantive procedures. The examiner will test both your knowledge and application. I told you, 2 questions will be on knowledge, 3 questions will be on application. She has previously commented that students often confuse this and lose marks in the exam. We will look at the past exam audit and financial statements assertions in the next slide. Fine? Is it right? Now, I will stop here. Is it okay?
Okay.